Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. New week. Treasury's already doing crazy things. Man, already. It's just, we get no break. Oh, my eyes are watering a bit today. So let's come over to the charts. I'll show you what's going on. Early in the session here in the Treasuries, things were kind of continuing to the upside here. Of course, Friday, very good day for the Treasuries because the Japanese yen was seeing some intervention, and because of this Wall Street Journal story suggesting that the Federal Reserve will be strategizing its next steps. Up here at the top, you can see some big volume, big point of control on the overnight. Not that point of controls matter or anything, but in this case, why does it matter? Because there were some really big block trades up here that were they're getting reported by the big bond news outlets. So somebody stepped in here and was like, okay, we got to sell more, or we're going to take advantage of this and sell. So I don't know if that was more foreign sovereign wealth funds getting rid of some of their treasuries or what, but here at this moment we're seeing the treasuries sell a little bit harder. Equities also struggling a little bit overnight, down, recovering. It's kind of all over the place. Oil back below 84, and that one's, oil's kind of getting interesting to me, to be honest. It's just like it's kind of getting in a tighter range, and it's like, is it gonna go up, is it gonna go down? I don't know what's gonna happen. Midterms are gonna come and then it's just gonna be kadoosh. I don't know. That's what everybody says. Said I shouldn't say I don't know, I should say we'll see, but that's what everybody says. Gold and silver did really well on Friday and just kind of pulling back now, and copper kind of the same with the rest of the metals. So that means that dollar forces still one of the most dominant influences out there. And then we got Bitcoin falling a little bit, but it had a spike over the weekend, spike over to the higher end of the range. I read this story, where was it? I think it was on Zero Hedge. It's so funny, like I'll read headlines and I'll read stories, and like I always have like my initial gut reaction, and I think sometimes that the narratives that people try to paint are kind of funny. So like in Bitcoin, they're trying to say, the correlations have changed and now Bitcoin is a flight to safety asset. Okay, good luck with that one. You know what the other one was? That White House advisor said, oh, don't worry, like the economy is strong and everything. And I was like, oh, okay, yeah, that's good. The economy is strong. Oh, wait, it came from the White House. Never mind. That's not helpful when it's them saying it. HK market, you think it's the Chinese markets doing all this? I don't know what's going on, but there's been some pretty extreme selling through here this morning. So I think we got to be on our toes. For now though, I am going to I'm going to pull up my my controls, make sure that they are on, the safety is on. The safety is on. Now, the next thing that I have to think about, not that I have to think about it, but I got these sticky notes, and guess what? Fly came on and peed on it. Do you see it there? You see how like the part of the sticky note is like more vibrantly yellow? What the hell? I think, oh my gosh, and it went through like multiple pages too. Well, three pages. Nice and clean. I need to get something, I guess, to like encase it in so that nothing can poo-poo on it. Is that a thing? Is that a thing? Like the flies Flies pee on sticky notes. Maybe I need to get fly paper strips. That's what I should do. That's what I should do, and then I won't have that. Then they'll go to that, and I won't have this problem. It just bothers me. I can't stand it when it's like it's got like a spot on it. You're like, you're coming here for serious financial analysis, and Seth is talking about flies peeing on sticky notes. That's even a thing. I don't know. Japanese lady beetles? Something is making my sticky notes have spots on it. Because there ain't nothing been in here. Like at first I thought, oh, it must be like I'm taking a drink or something, and I don't know, spittle comes off my mouth, or I'm eating and I accidentally touch the paper and I just don't no, nothing's been in here this weekend. Nothing's been in here this weekend. And it was not like that yesterday, because I remember thinking about it and seeing it yesterday and being like, well, I can move it over here. Unless something's like dripping off of the, I don't know, that would be weird. That can't be that. I hope that's not the case. Nah, that would make sense. Now, treasuries are holding here, but they look a little heavy. Don't you think? By the way, do I have stream beats like louder? Oh, no, okay, we're good. But it felt like it was a little louder than normal, but. Okay, so today, by the way, we should go over what we got coming, okay? We got US, S&P, services, PMIs, manufacturing. Okay, so all of the S&P PMIs are coming. So that's one. Bank of England's Ramsden speaking, and we've got a 6 and 3 month bill auctions. Biden speaks at 11 o'clock. Let me come over here. Let's get acquainted here. This week is kind of the weird week because well, it's a particularly weird week because we're like after the options expiration, right? Usually after the options expiration, then we got end of month. Well, we do got end of month, but end of month is next Monday. So this week we got, oh, okay, so tomorrow we got CB consumer confidence and Richmond Fed, and we've got advanced GDP and course PCE price index on Friday with consumer sentiment. So we do have a few significant news items this week, but this is still kind of a little bit of the off week. That's part of why I'm a little bit surprised to see the treasuries behaving the way that they are. I do kind of suspect that they will turn back down, but I guess we'll see. Oh, and there was, oh, okay. So 5:50. So about 40 minutes ago, I didn't notice when I was looking through my things. Maybe I just need to include the Japanese yen on my run through now. Japanese yen saw another big spike here this morning, but there was not any kind of shift in the treasuries because of it. I think that it's still one of those things where the treasuries are a little bit nervous about Japanese yen intervention because they think that maybe the Japanese could be selling treasuries to fund that. Just keep in mind that the Bank of Japan does have a swap line with the US, so they can get all of the dollars that they need. Okay. So, but they are selling treasuries too. So, it's just, I think that the treasury selling is happening at completely different times, right? You wouldn't want to come in and buy the Japanese yen and then sell treasuries at the same time because that doesn't really help you, right? Ultimately, they want the treasuries to move higher too. Do we want the treasuries to move higher? I don't think we actually do, but you get what I mean. Well, let's come over here to Twitter and see what we're seeing. Federal Reserve dealers sensitivity major barrier to all trading in U.S. securities. This being reported by Dan Barnes of the Bond Desk. It's one that I've been following. That's kind of like a little secret, just because they're good for bonds. Mohammed El Arian. We've redefined what a pivot is. We've redefined it from meaning lower rates to pausing to slowing. If you redefine that, you will have a liquidity effect, says El Arian. That is what we're getting. We're getting a liquidity effect rather than a fundamental. That is exactly what's happening. Oh man, that is such an excellent way of putting it. So I said this on TikTok the other day. I guess I haven't said it to you guys, but I really should highlight it, okay? The shift that we got last Friday, I don't think necessarily changes the financial conditions. I think that the whole point of this is to come in and say, hey, dealers, it's okay for you to come in and hold treasuries, you know, so that you can come in and do market making again, because nobody wants to hold it when it's just down every day, right? But to say, well, like, we're slowing the pace. Yeah. And the way that they're doing it, it seems to me, is intended to help liquidity. Now, the split side of that is that the liquidity here in the Treasury isn't very good this morning, is it? 600s, 800s, it's not very good. In fact, I think it's low enough to maybe say that we shouldn't be touching it. So I do see a little bit of a hint of this turning back around and wanting to move back up. But the liquidity is so light that they could just puke down to lows again very easy. It would just be like, it would just take a little sneeze. I don't know if I'm, well, geez, I'm not helping here because I need to be providing liquidity, shouldn't I? And it's just a little too scary. Well, if the big bank doesn't want to put up liquidity, why should I? Good comment from El Arian. Bloomberg TVD, if Japanese interest rates start to change, that could be a pretty big deal, says Larry H. Summers as he looks ahead to Wednesday's Bank of Japan decision. By some measures, you're in sort of unprecedented territory. Mohammed El Arian retweeting the Financial Times on why a political backlash against monetary policy is looming and why defenders of independent central banks must think about their democratic legitimacy. Yes, let's put the responsibility of monetary policy on democracy. Yeah, on the popular vote. That will go well. The way that I said that seemed very anti-democratic and anti-everyman, didn't it? I don't think that monetary policy should be made by popular vote. Fractal time zone price action theory? Meh. Does look like we're getting a move here. As I was saying, it seems like maybe would be a good place to buy it, but I'm just a little too wary about the liquidity. So I think, and especially here at 110, well, oh really? Okay, I guess they're just gonna blow through 110. You know, I would expect there to be a little bit of back and forth at 110, but if they're not going to do that, maybe this is a trend up coming. But I think I get to stick with my original thinking that the liquidity here is a little fishy. I am seeing a further move up in the Japanese yen as the treasuries move up here. The whole complex is moving too. Japanese yen's moving, gold's moving, dollar's moving down. Does kind of make me think that maybe it's Japan moving it. Also a little weary about chasing here. Is the market misreading the Fed signals? Asks Steve Leishman. I'll come back and watch that one in a second. Mohammed A. L. Arian, my opinion article on how the significant front-loading of this Fed hiking cycle amplifies financial stability risk, turns the central bank's policy dilemma into a trilemma, and accentuates spillovers for the rest of the world. We tested and rejected Friday's range. Not sure what you mean by that. Oh, you're saying that those lows were kind of like Friday's lows. That is true. Well, we did technically do that. I mean, like the high from yesterday was 109.31. They went more to like where there was kind of like more action, but FX Macro tweets, every time a Philadelphia baseball team wins a World Series, there is a financial crisis. It's not the first time I've heard that one, actually. Chicago stocks gave it all up overnight. Sunak to become, oh, I didn't mention that. Yeah, Sunak to become prime minister as Johnson pulls out. Which was kind of interesting that he pulled out. I wonder why that was. Okay, so was that another tick up? It went a little bit further, but it's kind of been a little bit more back and forth here from it. I'm still seeing that like the ticks up and down. It's, well, there's 800 contracts up here to do it. Well, I think another thing is that those, where we had those highs, right? Again, there was like some big trades overnight apparently for it. So a little bit concerned about an upside trend that doesn't really have legs, right? Like if this is just kind of like a technical rejection, or you know, somebody sneezed and accidentally clicked buy, or you know, the trend could flip around very easily. So I'm a little worried about that. Overall, though, I do suspect like my predictors of order flow that I have here and the flow analysis that we have are largely supportive today. Although I think that they're more supportive in the equities space than they are in the bond space. So that's another thing that we got going on. So I think that me being overly cautious here is still warranted. I mean, it's a Monday. It's a Monday, right? Like last week I traded on the Monday and I was like, I regretted it, right? Okay, let's read a couple of these stories that I pulled out. Dan Barnes, a new staff paper published by the Federal Reserve Bank of New York, has found that there are possible advantages to delivering all-to-all trading to the U.S. Treasuries market. What does that mean? In order to increase stability in times of stress. However, it also noted that a major barrier to using this protocol would be the sensitivity around primary dealers, whose participation in the dealer-to-dealer U.S. Treasuries market has become increasingly marginalized by the activity of proprietary trading firms. Some market participants observed that a subset of liquidity providers might choose to not engage with all-to-all trading if they perceive it as negatively affecting their business model, the authors wrote. For example, the current dealer-intermediated market structure may result in some dealers benefiting from intermediation revenues if they or other large liquidity providers were to choose not to participate in all-to-all venues. This could reduce the venue's ability to attract customers. Hold on a second. I'm not 100% sure what they mean by all-to-all. Okay, let's read this story here from greenwich.com. Nearly 1/3 of volume traded electronically in the United States now consists of much more than dealer-to-client RFQ trading. In all-to-all markets, where asset managers provide liquidity to dealers and each other, dealers trade with one another electronically, and non-bank liquidity providers that are building up notable client franchises are now at the center of the corporate bond market's growth and evolution. Okay, so they're saying maybe we should move to what they do in the corporate bond market. Okay. There's also keen buy-side awareness of the risk of alienating dealers, it went on, with some noting that those relationships could be affected by the use of all-to-all platforms impacting liquidity in volatile markets. Market contracts indicate that some customers are comfortable with their broker-dealers, making them hesitant or unmotivated to transact more in all-to-all trading venues, it noted. Dealers are considered particularly important for facilitating large trades in less liquid securities. Moreover, at times of market stress, having these relationships is considered important as they provide some incentive for dealers to take the other side of the trade. The broker-dealer relationship is also cited as providing other benefits besides execution, such as financing and information about market conditions. Yes. There would need to be sufficient critical mass from buy-side firms in order to deliver the necessary volume of trading to make connectivity with market infrastructure worthwhile, the authors wrote. Dealer support may be a necessary but not sufficient element for success without explicit demand from the largest and most active customers. The downstream providers of connectivity and post-trade services, e.g. market management services, vendors, clearinghouses, etc., may not be sufficiently incentivized to provide the system's connectivity necessary to make all-to-all trading an attractive alternative for many market participants. And back to 110 even. Well, that's all very interesting. I'm trying to wonder if that really has implications to us or not. It seems to me like it does, and I'm not smart enough to know what it actually means. That's funny. So in this a video clip that I just watched from Steve Leishman, he was saying it's not a pivot, it's just a baby step. Octavia's 700s and 800s is pitiful. It really is. Well, look, somebody decided to drop a big old fat order down at 31.5, and they're moving up. Well, they initially moved up on that. That does appear supportive. I sure do wonder though, because I mean liquidity looked okay on Friday. It's a little weird to me to be seeing it so low again so quickly. I mean, I guess maybe it's just early in the session and it's Monday and I don't know. I mean, it is trading here. I have to say that the amount of trading activity that we're getting here in the treasuries is a little bit above average for a Monday, wouldn't you say? How do you guys feel about that? Oh, what are the guys, anybody saying? Oh, okay, there you're posting something in Discord. MBO bids after Friday's rejection. Yeah. This I feel that this is a kind of market situation where the liquidity really matters, right? So I don't know if that means anything about this 31.5 sitting down there at the bottom, but I think that we have to keep an eye on the liquidity here really carefully. And if there is a change, we want to be able to see it. So okay, so they came down to the 31.5 and he pulled the order. Came back down there pretty quick and the order pulled. He didn't trade it, only one lot hit at 31.5, but It is kind of acting like if they decide to take another 2 ticks back up, that the big order at 31.5 will be back. Okay, so they start trading into it, and the 31.5 pulls. Well, that's not particularly encouraging for the long side, is it? Of course, it wouldn't take a very much of a shift in the market orders to move up or down. In fact, throughout these swings, the changes in cumulative delta have been pretty tiny. Okay, but that kind of says to me that our low liquidity concerns are fully warranted. Oh, what's this from Bloomberg? Trusses flop carries price tag for UK economy. Really? I thought that they don't change anything. Wow, really? The economy is likely to be 2% smaller than the pre-tax cut prediction. Jeez. GDP is likely to be about 2% smaller next year relative to the forecast. Okay, so are they saying that if they expected 2% growth, that the change is 0.2% or 0.02% change? Hell, I don't know if that's actually a big deal. I feel like watching native orders is not that informational. So are you talking more about like icebergs? So, you know, this kind of the interesting thing is like an exchange side iceberg versus a synthetic iceberg that you can put through like TT. There are still some advantages to doing an exchange side iceberg though, because they can't trade through you. They have to trade it. But ultimately, what matters is the liquidity conditions that it creates, and we need to see situations where the liquidity is actually higher than what is insinuated by the resting liquidity, right? But I think that the counter that I would say to all that, yes, synthetic data is not providing a real edge. Yeah, so the thing that I would say is that it is a misunderstanding of order flow to look at any one single order or small subset of orders and say that's the thing that's going to predict where we're moving next. I feel that early on in my career, that's what I believed, and that's what I was doing, was I was watching for things like that. And you can notice I have a tendency to still notice that stuff, and so it might be easy to think that, okay, Seth noticed this big order here, and then we moved up, so that big order was the thing that I was looking for the trade or whatever. Nah, so it's not the case. We're just trying to notice what the liquidity in the market orders are actually doing, right? So we want to try and think more big picture and avoid trying to apply technical analysis to it, right? So is TT DOM showing synthetic alone? Well, they're only showing the resting orders that are resting, right? If they have something that when they sell through it, they put more up, there's no way for anybody to see that how much is going to be resting behind it, right? They took like a tick up there and then got slammed back down to the bottom of the range. Is there volume behind that? There is, just a little bit, a few, maybe 1,000 orders or so through this range. Not seeing a super clear action in the 6J, so it's kind of feels like the 6J saw an initial spike and then it's kind of gone flat, and then that's too hard to read how much these moves between the treasuries and the 6J have been correlated since then. Yeah, I'm not sure what you're talking about. The TT DOM can show synthetic or something? I'm not sure. They have synthetic orders that duplicate icebergs. Sure. Good morning, Tobias. I guess the whole Rishi Sunak is set to become UK's next prime minister thing is like official now. My neck and back feeling a little tense today. Okay. So there might be some market I'm sure that the gilts are probably seeing a little bit of volatility because of this. Oh, okay. Rishi Sunak is the only candidate nominated to be Conservative Party leader. So basically everybody else has dropped out, I guess. Okay, a little pushback in the other direction again and coming back to 110 even. Well, this sure is choppy. I think that if I had if I had tried to go long up in here, I think I would be a little disappointed. It did come back, and I think there was at one point where I was looking to go short 19. So it looks like I might have been able to make $10 from it, but it's been awfully choppy. I think that if I was in a position right now, I would be a little frustrated, because this is moving out a lot. Oh, what's this here, Octavius? Huge MBO bid in ZT. Oh, wow. Yeah, that is a really... Wow. Wait, is that a... What the fetch? Why do you have commas in your number every 4 digits? Oh, those are MBOs. I see. That's total, it's 5,000, but there's 1, 2, 3, 4, 5 separate 1,000 lots. Interesting. That is really interesting. But it's the 2-year. They have that strange queue, so where you want to put those, you put those 1,000 lots in there to make sure that you get executed first. I watch what's going on in the UK, and I hope that it's much more orderly, but I'm concerned that it comes to the United States, because once you get over 100% debt to GDP. Well, watching this thing the other day, I don't know. Well, I don't know. He was talking about debt to GDP, and he mentioned several key points, right? The only key point that I ever remember being told about or hearing was significant was 200%. That, like, if you get over 200% debt to GDP, like, it's you tend to not come back from that, right? But he was saying that when you get over 100%, well, actually it was more like 90% debt to GDP, that your multipliers change, that monetary or fiscal stimulus ends up being not stimulative anymore. Essentially, you could take $1 out and you only get 90 cents of economic growth out of it. That's a little concerning, right? I don't know where you get that from. I don't know where he was getting that from. So we need to do a little bit of research today about debt to GDP key levels. He also said that, like, the goal was to keep it below 60. I'm like, well, we've been well over 60 for a long time now. So, like, eventually the United States has to bring a balanced budget, right? This is going to be painful. And I also kind of suspect that the way that it will work is conservatives will get put in, they will fix the budget, the economy will tank because of it, and they'll get taken out of office. But then, right? Like, they will fix the problem, but they won't get to reap the rewards of it. They'll get blamed for the economic weakness that comes. Yeah, I'm just seeing a lot of stuff on Twitter now about Sunak. Well, I tell you one thing. Rishi Sunak, that's a man. I mean, I'm not saying that he's like a good looking man. In fact, there's actually a couple of things about his face that are a little. He's got, where is it? Come here. He's got big ears. That guy's got big, I guess it's the UK. I guess those aren't big ears for the UK, but I digress. He's got a very manly face, doesn't he? A very wide jaw. Big brow. That's a man with some testosterone. So it's like they chose a woman prime minister and then they went the complete other way and found a manly man. I don't know if that means anything. Just what I notice. Just saying what I'm thinking. He is Indian. It was said that he was too brown to become prime minister. Really? Well, why would that be? You think that not enough people in the UK? You're saying that people in the UK are too racist? So let's learn a little bit more about him. He is the son-in-law of Infosys. Oh, Rishi Sunak. Wikipedia. There was some further downside there, man. You see what happened there was I wanted it to move up. That's really in the end. I think I want it to move up right now, and I could read the liquidity and the previous action. Like again, I don't want to look into too much into one big order. Okay, but when you get block trades that are big enough that you read it in your morning news squawk, those ones you got to pay attention to. So I knew to be suspicious, and in the end, it was a good choice. They came back. I don't know if it was really worth the trade in the end. I mean, the amount that we've moved here is not really that much, so. But good for me. Good read. Rishi Sunak is a British politician who has been leader of the Conservative Party since October 2022 and was Chancellor of the Excelsior, having previously served as Chief Secretary to the Treasury. Born in Southampton to parents of Indian descent who migrated to Britain from East Africa in the 1960s. Wait, so he's Indian, but he came from East Africa. That's interesting. Sunak was educated at Winchester College. He subsequently read philosophy, politics, and economics at Lincoln College, Oxford, and later gained an MBA from Stanford University in California as a Fulbright Scholar. What is a Fulbright Scholar? I guess it means that's a really nice program that's been around for a long time. Several United States cultural exchange programs with the goal to improve intercultural relations with cultural. Okay, so he's smart. The gist of it is he's well educated. Let's say. Let's not say smart. He's well educated. I'm more interested in him as a person, like where his family come from and all that. Born to African-born Hindu parents of Punjabi Indian descent. Oh, okay. He is the eldest of 3 siblings. His father was born and raised in the colony and protectorate of Kenya, while his mother was born in Tanganyika, which later became Tanzania. His grandfathers were born in Punjab province, British India, and migrated with their families to the UK in the 1960s. Mm-hmm. Okay. His paternal grandfather, Ramdas Sunak, was from Guruvanapraja and moved to Nairobi to work as a clerk, where he was joined by his wife. His maternal grandfather, Rajabir Sandberry, worked in Tanganyika as a tax official and had an arranged marriage with whom he had 3 children. And the family moved to the UK in 1966. So the family's been in the UK since the 60s. And before that, they're kind of clerical workers. Yeah, Shavir was a general practitioner and Yusha was a pharmacist who landed. Okay, so they're also doctors. Sunak attended Stroud School where he was head boy. Sounds like this guy's got a pedigree. Oh, here we go. Here's the stuff. Sunak worked as an analyst for the investment bank Goldman Sachs between 2001 and 2004. He then worked for hedge fund management firm The Children's Investment Fund Management, becoming a partner in 2006. He left in 2009 to join former colleagues in California at a new hedge fund firm, the Lem Partners. So he lived in the US for a while then, huh? He was also director of the investment of Cataman Ventures, owned by his father-in-law, an Indian businessman. Okay, so I see. So there was kind of some dissatisfaction I felt from some conservatives here in the US, saying that really what happened was a globalist takeover of the UK government. So really what they are saying is that because he worked for Goldman Sachs, that he is a globalist hack, etc., etc., etc. Sunak is crypto friendly, they say. He might be. Man, it's the order flow is getting a little bit more frantic here at the lows. Can't help but notice that the offers are much stronger now that we've moved down. There is the liquidity. Well, once we get below 22, liquidity looks a little bit better. But I'm a little bit concerned now that we've got a few weak bids below us. He looks to be too competent for the Britons. Well, you know, it's kind of a thing. Like, listen, not everybody that ever worked for Goldman Sachs is a globalist or any of that nonsense, okay? They don't think that way there. I got to tell you, how do I say this? How would I describe this? Goldman Sachs let me put it this way. Goldman Sachs was founded by Jews, and you know, they very much have Jewish cultural values. When I say that, I don't mean like, because what I'm trying to avoid here is some people think that like the Jews are only out for themselves, and I'm none of that anti-Semitic garbage. But there are definitely like cultural values that Jewish people hold that I really respect. You know, like they think that it's very important to teach their children how to make a living. That is very important. They think that you need to be honest in your business dealings because you're going to be around for a long time. You know, how are you going to be able to be in business if you're being dirty? People are going to, you know, that doesn't work for you. You need to be honest in your business dealings. They believe that that God is with you, and so you need to take calculated risks. You need to take calculated risks because God will be there to ensure that you don't just completely go kaput, right? And so they also believe in being strong local citizens. They believe in giving to the community that you live in, right? So these are all values that I think really originate. I mean, it's not like other cultures don't have these kinds of values, but it's kind of the intellectual framework that it comes from is very Jewish, right? And that's what I see in Goldman Sachs and a lot of Wall Street, to be honest with you. A lot of Wall Street, to be honest with you. So I don't think that it's the case that these organizations, like many conspiracy theorists say, are just globalist hacks there to help the globalists and, you know, do whatever is best for the rich people that are already out there. Chewing into the big order in ZT? Kurtang and Truss was a joke. That's why they have a 25% inflation. Anyways, there's all these conspiracy theories out about Goldman. And yeah, I worked there and I really liked it. And I really liked the people and I really liked the values. And frankly, I turn around and I use a lot of those values to guide in how I trade and how I approach the stream and stuff, right? We focus on integrity, excellence, and teamwork, right? That's not to say that there aren't people out there that are primarily interested in their own wealth that has been accumulated since the 1970s from the rise of globalism, and that they are primarily concerned with preserving globalism and the money that they've made from it. There certainly are people out there like that, but I think that that's changing. I think that there's been a change somewhere along the line. I don't know exactly where it started or what the piece of news was that made it happen. Maybe the piece of news is stuff that's not publicly available to us, but there was kind of this shift from the foreign policy establishment and people in the US government and so forth, that all of a sudden, deglobalization is happening, that we have to separate our supply chains from Russia and China, that we need to focus on developing the semiconductor industry in the United States. I haven't heard anything about like rebuilding the industrial base in the United States, but I would figure that eventually it comes to that as well, right? That's the way that it's going, and frankly, it's going to have to happen, and it's going to be a hard thing, especially for some of you guys in Europe. So, like the other day, Macron, he's not too happy about the way that things are going right now. He says, it's not very fair, because the U.S. does these protection things, but then they get all upset when we do them. And you know what? It's not fair. It's not. But we got some challenges ahead of us. So we've got to figure out how to work this out so that everybody can be strong, right? The United States has to stay strong, but we need to beef up France, Germany, the UK a little bit, especially the UK, because they're having some problems in the UK, right? We need to beef them up because it looks like we got some challenges ahead of us, right? That seems to be the way of things. Some people, like the World Economic Forum, seem to have missed the memo. Don't understand that this is the way that things are going. But I believe that many of these big financial institutions, like Goldman, understand what's what, and they will in the end be good global citizens and American citizens, and will do what is right for the West, and that they won't put globalist interests ahead of that. So this guy, being from Goldman, doesn't say anything about him being a globalist takeover or anything. I think it just says that the guy that's becoming prime minister over in the UK is a pretty smart guy. It's a pretty smart guy. Yes, the BRICS meeting are going well. So do you see, this is kind of weird. Like, we could see the liquidity was a little bit weak all the way to 22. And so they just went for it. Very quickly they went for it. So that move was a little bit better Like, we were looking at 90 where we said, oh, maybe we should have gone short. And it was good that we didn't. And then at 4.2, I was still kind of like, well, I don't know if I really want to do anything. But even if you had taken 4.2, that's like $30 now. So that was very, very quick. That was a very, very quick move. And it looked like it was particularly nasty in the 30-year, although I'm not seeing a huge change in spreads. It's just, if you come over here and you look at the chart, you can see that in the 30-year, maybe it's just the scaling, but in the 30-year, they just got hammered. They got really hammered. I hope that whole little spill there, because I'm trying to be careful with the words, because we've got big challenges ahead of us, but there's also a lot of conspiracy theories and other things going on out there that I feel like are kind of not helpful, right? I mean, I think that people trying to still push globalism when we kind of do need to focus on our own supply chain now, that's not helpful. But making it into like a global conspiracy and all that kind of nonsense is kind of doesn't help us accomplish that, right? Where the focus should be where are we heading and what does our strategy need to be, right? Size printed. Yeah, well, it was. The reason why I say it's so interesting is just because it's usually not the case that I can predict the inflection points that efficiently. It went almost exactly where we said. It was like they broke through, and then it was like, well, the liquidity is a little bit too low through here. They're going to slip back through that. By the way, look on the upside. Look on the upside now. You got this area right here and this area right here that's still a little weak. And then there's this area a little bit lower that's also a little weak. Problem is, I'm not sure where the flows are coming from. It seems like the Treasury is doing some relatively dramatic things this morning, and I don't really have any real explanation for why the flows are coming through. Like, that's trading like, you know, not that there was breaking news or anything, but that there was some sort of piece of news that they had been continuing off of or something like that. Oh, was today Groundhog Day? Did not know. Brandon Greenwald, British Tories make history. They've elected the first ever Prime Minister of color in the history of the UK. This is going to be really interesting because, like, I kind of wonder, okay, what was Rishi Sunak like politically when he lived here in the United States? He's a conservative over there in the UK, but does that mean that he would be a Republican? Not necessarily. Not necessarily mean that he would be a Republican. Who was the previous chancellor? You know, what's also weird to me, maybe it's because he's looks like such a manly man. I don't know what it was, but like I didn't spend any time looking up who Liz Truss was. I was like, okay, well, crazy things are going on in the UK. I don't know what the deal is with all this. Didn't really look up her history. Maybe I knew that she wasn't going to last very long. I guess part of it was like Johnson coming and going so quickly too was a little bit like, okay. I bet you. I go to the Donald. Or sorry, Patriots.win. I bet you that if I see anything about it, it's going to be negative. They're going to say that he's a what do you say, like a globalist underminer or something. Rishi Sunak looks set to become next UK Prime Minister after Johnson quits race. If I become Prime Minister, I will crack down on Islamic extremists. I guess we are going to get some comments from him, so that might be part of why. I guess Sunak becoming Prime Minister could be just the only explanation for all of this stuff going on. Did you watch the TV spots for some of the candidates? So weird. You know what? I've been, since the last election, I think part of it was because I made a little bit of content related to that. And well, I really should have done it on a different channel. And ultimately, because of the way that race went, the content didn't end up being that good. You know? Like, I was all excited for a good race with the Democrats, and then, like, it kind of came down to those last two, and then the pandemic happened, and it was like, okay, I guess it's Joe Biden. I'm just like, what? Okay. Kind of, yeah. So I've been really disengaged since then. I mean, I pay attention to it a lot. We still talk about it on stream, particularly when it seems to be important to markets. Oh, they're going to come back across this range, huh? This is awfully volatile, man. It's got to be trading from the UK, though. Anyways, but more so than that, I've been particularly uninterested in what's going on here in my local state. I'm just I did not like the way that some of the politics in Utah went, and I'm continually looking at it like it's always the wrong person winning the nomination and all these sorts of things. So in Utah, there's been a lot of political drama because this race between Evan McMullen and Mike Lee has been getting a little nasty, let's say. I'm continually seeing web ads about it. I'm really suspicious of this McMullen guy. I've heard because he's a little older than me. I think he's 2 or 3 years older than me, and he's single. I think he's married now. Is he married now? I think he might be married now, but he was single at the same time that I was single. And some of the girls in the scene, they had met him, and it seemed to me like he was extremely politically ambitious, and that alone, that kind of ambition coming from where he did and everything, it was like, I've decided I'm going to become a politician. I think you got to be suspicious of those people. The people that want the power are usually not the ones that you really want to give it to, right? Anyways, there's been all this drama about it, and I'm just kind of watching this like, ugh. This is not going to end well. Everybody's talking about it, and I just don't. Not interested. Yeah. They're Senate. They're big boys that can take care of themselves. So I don't need to get involved. Did you read? Oh, I read it cover to cover, my friend. Took me I think it took me a month to read through it, but I think part of it was that at the very, I think part of the difficulty with the book, or should I say the difficulty with the book, like it was an interesting experience because when at the beginning, I was kind of like, well, I'm not quite sure where this is going. Some of the things at the beginning were like, oh yeah, okay, that's just how a market works. That seems like no duh, right? But when I started to get towards the end and things started fitting together, all of a sudden it was like, oh, all of these things that I knew and I had heard, and now I'm piecing together where they had come from. And I wish that this had happened 5 years earlier, you know? But I read it cover to cover. When I got to the end, I was about halfway through. I started to get really excited about it. And it's like a book that I've reread big sections of it. Like I'm constantly coming back to, okay, here was some things about it. Let's make sure that I got all my ducks in a row and read through it in detail and stuff. And so I've read it multiple times. How did you deal with all of the notation? Okay, yeah. So the answer to this is first of all, don't. So what you want to do the first time that you're reading it is understand that this book is like, think of it as an introduction to market microstructure. There are actually, I haven't read these other books, but there are some other books that are about microstructure. They're a little bit more serious, like Market Microstructure in Practice. And there's another one, I forget the name of it, I think Lahali. I don't know how you say his name, but he's a professor over in France that's is even more prominent than Jean-Philippe, but he's more of a professor. And I think he has a book too. But Jean-Philippe's book is really more like an introduction to all of this stuff, right? Don't you use the pulling and stacking column? I don't. I think that the pulling and stacking columns are really great, but I can see that stuff on my own. I can remember what was there and how much traded, and I can see it on my own. And the pulling and stacking further away, I've never really found that to be super important. Anyways, where was I? So it's kind of an introduction. One of the things that the book does really, really well is like the summaries at the end, right? Like, yes, they go through all of the math and they prove the math. Yes. But they also go through what the implications are for the market about this, right? So really what you want to do is you want to make sure you know like the general concepts and the implications that those have for how the market behaves, right? Then after you've done that, then you can go back and you can start being like, okay, I want to know what all these variables mean, right? And what you will find is that they are actually very, very consistent with the variables, okay? Like sigma, the little O with a, the little O with a line coming off of it, that almost always means volatility, right? So V is almost always volume. Q is almost always the size of the meteor. So then you get Y, which is just a constant, Y sigma times the square root of Q over V. And I know that by heart. It's like, to me, it's like not even memorized. It's like I know it by heart, you know? And you'll start to get to that. And then you can go back and you can really do a deep dive and focus on the symbols. And something that might help you if you're really having a hard time is like getting a notebook out, writing the equations out, like write the equation out with a bunch of space around it. Like, you know, I'll do it again here. Square root of Q over V. And then we can come in and we can say, okay, this is volatility. Right, this is the size, this is the volume. Right. Now go back through and run through their steps and write them down, and you'll see how it comes out. I would like to get into some of the other equations and get to know all of these equations by heart. Like, I feel like I should really know the math behind the Kyle model by heart. For instance, that's probably the next one I should focus on. Right now, though, I'm focusing a lot more on the Series 65. I don't know what I'm doing with the Series 65 when I get it, but I'm going to take that test, damn it. I put a lot of work into it. I'm going to take that test. I'm going to be, I guess I'm going to be an investment advisor. I'm wondering if I should just become, or sorry, I'm going to be an investment advisor representative. But I think that that also means that I'm going to have to create my own investment advisor firm. I think that's what it's going to mean. So does that mean that, like, I can have you fill out a form and then we can come in on stream and walk through a plan with you or something like that? And then maybe there's some other stuff that I give you that I don't necessarily give the people that watch the video. You know? I'd have to be a federally covered advisor, but that might be interesting. Okay, so they come back down to the lows here again. I don't know why, but I still kind of feel like taking longs, which doesn't make much sense because the flow is definitely to the downside. I am seeing there was a large iceberg offer that got absorbed there in the 5-year. So that ended up with a pretty big cumulative delta to the long side here in the 5-year, despite us falling down. The 30-year is the only one that I'm seeing that's actually showing extreme selling in the bonds. So that, I think, would be... Oh, also, I'm not seeing a whole lot of movement in the 6J along with all of this. Nor am I really seeing a huge... Well, yeah, I'm not really seeing huge movement in the dollar either. But I'm also not seeing movement in the British pound, so... I'd still say the flows seem to be not too helpful in trying to determine where this is coming from. I do believe, though, that it is from the UK. So I don't know why this would all cause a reaction from the bonds, but it feels like the long end of the curve is puking again, like they were doing with the... You know, when everything was all crazy for the UK. So there's going to be a Justice Department news conference at 1 o'clock Eastern time on a matter of national security significance. The way that they said that like rampant speculation here. Okay, what is the word? A disclaimer, big disclaimer. This is all speculative. The way that they said it made it sound like it was a domestic terrorist case. That 30-year is hanging out down there, man. We're now 5 basis points above 4.2. So I'm still sitting here thinking, why would the market care or not care that it's Sunak versus anybody else? Why would there be a reaction? Shouldn't this just be like, okay, yeah, that's how we thought it was going to run out anyways? Because he was leading before anyways. But it could just be that people had certain trades on. But I am starting to find this downside move a little weird. But you know what? That's the way it's been on a lot of these downside moves that we've had that were being driven primarily by flows from the UK. Jeez, yeah. See, so I was saying I bet you that if I go to Patriots.win, I'll see disparaging comments from them. So here's this one. Can't even be the prime minister in their own country, have to let foreigners do it. That is so not cool to say that. Like, his family has been in the UK since the 60s. He's British. And he's a smart guy too. I don't think it has anything to do with him being Indian. That some of these comments are just straight up being racist. That's so disappointing. But that's the way that website's been going for a while. Oh, so you're asking and bringing up something completely different, Akshay. Who are the people who were claiming that China delayed GDP data because it's bad? It blew past every forecast. The only thing was bad was the import-export data both down. Well, so my question to you is, what makes you think that the data that they were giving is actually accurate data? I think it was pretty clear though that they delayed everything because of the leadership meetings. Man. Okay, so here we're getting PMIs now. PMIs matter. Ouch. Wowzer. Okay. So I'm gonna refresh here. Hold on. Okay, services was lower than expected, 46.6 versus 49.5. Manufacturing, 49.9 versus 51, so lower than expected. Composite, 47.3 versus 49.3. So overall, pretty bad numbers. Yeah. That was an extreme move, wasn't it? Well, this could be interesting, because the U.S. traders reacting to that news could just wipe through almost all of that extended downside that we saw, and it looks like they might be looking to continue through too. So we may be getting a prime example of the inverse sine law. Nothing, just poking at the fact that it gets delayed every 5 years and not due to anything like good data, bad data. Yeah, well. There are some strong bids behind this too. Look at the S&P 500 loves this. That's so funny. I always find this amusing when they... Okay, so I'm still seeing pretty aggressive flow here at 28.5, although it does appear to be having a little bit of a hard time holding a bid there at 28.5. So a little bit of a distribution here. Okay, I'm hearing that Sunak at their leadership meeting or whatever told the conservatives that their first priority is economic stability, and that their promises or whatever that they had in a manifesto are secondary right now. Well, I'm kind of only looking for this to be a trade, so I think I might just nope. ZA, good morning. Whoa. What was that? Micro is shifting around a little bit too much. My likes. Yeah. Well, that one sucks. You know what? That was better than some of the other trades that I've done here where they've come back on me like that. I understood the action there. Kind of sucks that I wasn't able to get 20 ticks. Just shy of 20 ticks. I wasn't able to get 15. But I could kind of see there when I wasn't getting my fills that this was running into its issues and that they were going to slip back into the hole. So we might be able to justify another trade here once they settle into the hole. But I'm kind of leaning towards being a little hands off here. That was a pretty strong reaction to the PMIs. You know, PMIs are more like a leading indicator and not as reliable, and they don't move markets quite as big, but in this economy they have been really key indicators, and today there was a very outsized reaction to them. Yeah, so I'm looking here at 24.5 now. Liquidity is still pretty bad, and it's pretty bad all the way back down to like 21, which kind of bothers me. 6J definitely moved there. Gold moved. Oh, actually, they made a good little move there, I think. Too late. Too late. Wow, that moved. Interesting. So I see them wrangling around in here, and I'm kind of like concerned that I can't get a good spot, but I do. I'm kind of feeling like, let's wait. Relax. They seem to be maybe settling into a hole here at 25.5. Yeah, no reason to diddle in the middle. Well, it is kind of acting like that they might just shoot back out the top here. Right? It keeps coming up to the top and getting you start to see a little bit of an increase in the tape, and then it fizzles out and goes back to 25.5 again. So here they're trying again. There is somebody selling this. Looks like there's some sort of large meta order selling into this. So maybe those UK pension funds that wanted to sell are like, oh, this is great. we can sell at higher prices. So I was thinking 4.23 at one point, and by the time I started to think that that would be a good idea, it was like way too far past, right? Now you're like, okay, now 22. And I don't know about that. VWAP traders. Well, VWAP is still all the way back up here at 110. When I took that original trade, that's kind of where I thought it was going to go. Oh, look at that. 30. There was a 3K at 28.5. I guess I should have done it. It's okay. It really looks to me like there is a trade on the other side of this, like that something is selling into it, but they're just getting overwhelmed. They'll love the dating advice code. That's probably a Friday only discussion point. We won't get into dating right now. Yeah, see, look, I would have been 20 bucks. Seth, too conservative again. Nope. Okay, so there's a big order at 31. We've seen big orders at 31 before, haven't we? There was definitely a climb in deltas there, though. You see that? There's a lot of that going back and forth at one price. Now, big order there at 31. Push back. Wow. Wow. See, there's a seller. There's a seller, and he says, I like that you guys are buying it. Oh, yeah, the dollar's getting creamed. You're right. Seeing the British pound rise a little bit off of that, but they're not out of the woods yet. Japanese yen is looking good, though. I bet they're happy. Nope, not my spot. No bueno. Get UB back to 200 so that we can trade with 1 point bid ask again. That's okay. I think I'll leave the UB off of my screen. It's too distracting. See, that's the problem with putting UB on your screen, guys. Is it's impossible to have it on there and not want to play with it. And then you start playing with it, and it kind of like, it seems like, oh, this is great. And then one day you just go, bleh. See this all the time. Yeah, that instrument scares me. UB scares me. Well, I didn't chase it. But I didn't get a very good spot. Mohammed A. El Arian, the reaction of the 2-year yield to confirmation that Rishi Sunak will be the UK's next prime minister. The next domestic influence is Monday's policy announcements, where the focus will be on both the fiscal framework and the growth outlook. Huh. So you can see a large bid that when we tick up shows up, and then when they tick back down, it pulls again. And now they traded through it with no volume. Sir, you want about 50-year bond futures. Listen, when I say that it would be fun to have a 50-year bond future, I'm not saying that I would trade it. I'm just saying it would be fun. Man, the duration on something like that would just gotta have to be insane, right? Okay, so a little bit of another push there by the sellers, and the buyers are able to bring it back up, so that's encouraging for the buy side. They're still not able to hold a solid bid at 26.5, but this is a tough market for noobs. Yeah. Well, it's like this stuff that you got right now, where it, to us in the United States, it just feels like volatility for no apparent reason, you know? Okay. Somebody deciding to absorb a little bit at 25. Ticks up. No bid, but ticks up. Somebody deciding to absorb on the offer too. And they trade through 25 with about 1,500 contracts. Markets came to play today. It's really quite. It's so the UK stuff, I'm not quite sure what to make of all of that, but the PMIs is definitely like a big red flag that like the Federal Reserve probably needs to start backing off, right? Yeah. Like I think that we got to be careful about extrapolating too much from one data point, okay? But this is kind of starting to look like, hey, maybe they don't even do 50 basis points in December. Maybe they don't raise it all in December. you know? Like the big point is going to be in a week from now, the jobs numbers, right? Jobs numbers always the big one, but ouch. Sellers making a couple of big victories there. Buyers were looking good, but no, the sellers did sell through them. The Swiss thing is more of a bigger red flag than that instead of, well, I think you're right that the Swiss thing is probably a bigger concern, but I don't think that the Swiss thing is so the problem is that the Federal Reserve really, if they lowered interest rates when inflation is still raging and then inflation came roaring back, that would be like so terrible. Okay. So I think that there is a scenario where they don't bring rates back down or anything, but they do intervention to keep markets supported, right? And that's what looks to be happening with the whole Swiss situation, for sure. They're giving them the money to do it, right? But that doesn't mean that they're going to change interest rates. So we kind of have to look at the market stability and liquidity problems and the inflation problem. Maybe they are somewhat disconnected now. Of course, they affect each other, but for current policy actions, they're a little disconnected. Well, I was looking for this to come back a little bit, but it's just it's kind of fallen a little quickly. Problem is it's kind of doing it in a way that just makes me want to buy it still. Like the sellers definitely made some victories there. I think a lot of it was because the dollar pulled back really significantly, right? But like the volume is still buy in the Treasury. The volume is still buy in the Treasury. Either they do it or the Treasury starts to buy back stock, else the S&P is going to stop playing hedge fund and be the central bank to get margin called. Oh no, I don't think that it comes to that. I mean, we're all pretty sure that it's Credit Suisse, right? At this point. I don't know. The whole thing with Credit Suisse is kind of weird because it's definitely under stress, but like at the same time, like the swaps and everything don't suggest to me that the market thinks it's going to go kaput or anything. So, but then they're giving all this money to the Swiss National Bank, and they're probably using it to prop up Credit Suisse, and nobody's saying anything about it publicly. It's like we can all see it happening, but they're not saying anything. That's a little weird, isn't it? But you know what? Actually, so remember that during the 2008 crisis, that they were giving money to a number of banks, and nobody ever knew, right? It wasn't until like a few years later, like long after all was said and done, and then they said, oh yeah, we gave money to these guys and these guys and these guys, and everyone was like, oh my gosh, like if we had known at the time. And I was like, you see guys, you don't actually want to know. You don't actually want to know. Credit Suisse will be all right. Swiss silver and stock. Well, then let's go buy it because it's not looking so hot right now. Okay, so the buyers were starting to get a little bit of momentum on their side again, and we did see some buying in the 10-year, but they just got smacked down again, which I find very disheartening. And I think that I have given this already way too much room. So, suck. Terrible, terrible, terrible trade by me. I was thinking on that one. Well, I do need to give it a little bit more room than usual because of how volatile it is, but price is just not going my way right now. In fact, the way this is going is really making me think that like maybe the UK is just selling, or maybe some countries are just selling, and they don't care about those PMIs, right? They don't care about those PMIs. But I still feel like this is a spot where they should find some support. I don't know. So I feel fine about that, and like I still want to kind of take a trade, but then I can also kind of feel it in my face, so I'm very unhappy about that loss. So maybe I need to relax for a little bit. I would have a tendency to want to, like, as soon as I get out of a trade, to want to immediately want to get back into one. So let's wait a little bit. What prices? Where's my 252? Oh, Jesus, this is a terrible, terrible exit. Okay. Today's 10 to 20% crash in Chinese shares is just the beginning of the destruction of Western capital invested in Chinese companies. It appears that Xi's great struggle is also meant to inflict maximum pain on those who believed reform and opening. Xi's wartime cabinet is in place. His 20th Party Congress purge not only installed loyalists, but 2 spy chiefs and military leaders responsible for China's reunification with Taiwan. He sacked the only 3 men with markets experience and a finance minister. She also added the Ministry of State Security to the head of Political Bureau and Central Committee. These moves send a clear message to the world that conflict and great struggle are coming soon, not since Mao has Chinese leaders stacked his cabinet with men with aerospace, weapons, surveillance, and military expertise. Conflict with Taiwan is now around the corner. The great Chinese liquidation of public and private equity is in full swing. Today's 10 to 20% crash in Chinese shares is just the beginning of destruction of Western capital invested in Chinese companies. It appears that Xi's great struggle is also meant to inflict maximum pain to those who believed reform and opening. Oh. Somebody got trapped there at 4.239. Market volume seems to have tipped a little bit more to the sell side, but it doesn't look like the volume in the treasuries is what's moving this market. It looks like it's much more the dollar, right? Although the dollar is pivoting here. Nope. Ouch. You see that big lot at 106.03 quarters in the 5-year showing up. And it's not stepping up to it either. No, I don't like that. A little better. What put you on to trading bonds mainly? I don't remember, to be honest, anymore. But I think that if you're trying to be an informed trader, that bonds present the best opportunity for you to trade as an informed trader, as a retail trader. So I think that's the biggest thing that really keeps me in the bonds. So I tried trading ES for a while, and I just the further away from it I get from that, the more I'm like, oh yeah, bonds is so much better. Not that it's always rosy in the bonds. It's been difficult trading lately, hasn't it? Ow, ow, ow. It really is like, I mean, they've been doing this both ways, but like they'll let you get to, okay, finally we get a strong, it goes 21.5 goes bid. It's a decent bid, and then slam, slam, slam. Oof. 1,000 contracts short. But that big order moved down. Shit. Shit. Shit, 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 shit. Are you fucking kidding me? Do you see that? Fuck. I tried clicking and it got away from me. I was trying to puke at 10 and I lost 10 in seconds there. The 5 years looks a little dangerous here. Like if they decide to go for those lows in the 5-year. This is a strong sell flow, guys. Like through all of that movement, and even in the 5-year, it's still sideways. But then we get down to the bottom, and it's like selling out through. Like there's. For all I know, that's like that's like it. They're not going to touch the lows, and Bank of England Ramsden is speaking right now. Yes, UK end of drama is significantly cutting risk. I don't know if that explains it at all. It's so weird though. EU crop monitor cuts maize yield forecast again. There is some... Okay. That's weird. So there's a big order at 28 in the 5-year below us. The liquidity below these two big orders at 0.5 and 0.7 looks pretty weak. What are the spreads doing? On the spike up, they steepened. They did not reverse on the move down. So they steepened and then held. Like, look, they're all gonna hit lows at the same time. If they push through lows, they're all gonna push them at the same time. So I don't know. It's kind of doing that thing again where like the 30-year is going to be the one to pull them under. Yeah. There's a new low in the 30-year. Not, well, geez. Oh, man. So I was going to say that was not quite as dramatic as the previous little move lower. At least in the micros it wasn't. But like, look at the offers that's followed. That was a little nasty. For them to move lower after that PMI and everything is something else. Let me tell you, this is an unusual move. Well, this isn't going to help the liquidity, is it? You know what? That breach of the lows, though, wasn't too terrible. So far, at least, it's only been 1 basis point. They're like, oh, it wasn't too bad. Okay, let's go for new lows then, Seth. How do you like me now? How do you like me now? At 28. Okay, so now we come to 31 in the 5-year. Currencies are not involved. You're right. It's the dollar is going up. Something's wrong. $14 iceberg. 3K. It's gonna be a 5K iceberg. Could be. Oh, come on. Let's let them do it. $3K offer. Okay. So like I keep seeing the 10-year be like, okay, that's enough, and then the 30-year drags it down again. S&P 500 goes around. So the S&P 500 must be watching this and being like, well, the bonds seem to think they know something. Spoos has to bend the knees. Bitcoin's taking a dive too. Something's wrong, man. What's going on? Well, that's a good pullback. You think Bitcoin will ever recover? To be honest with you, I feel like that Bitcoin is being propped up. I feel like that it should have gone further. You know, if you were like somebody, you were long, your whole living was Bitcoin and you were manipulating it, like we suspect that might be happening with Tether, then you're gonna look at something like this and you can be like, well, we can't let it fall any further, right? But really, the reality, I think, is that they need to go down to 1,500, if not 10,000, before, you know, Bitcoin can really build anything back up, you know? Well, I kind of got scared out there and only took a basis point, but it's possible that we go lower again. This whole thing is really, really shocking to me. Uptick. What does that put me at? Minus 46. Okay, so here's another theory. Based on the deltas that I saw and everything, it looks like that all of the orders that went long after the PMI probably ended up puking, because the rise and then fall there matches almost exactly in the cumulative delta. So it may have been that. 265 was my original entry. Right there. Saw this Rishi Sunak video on mute and was sure it was Beto. They do look kind of similar, don't they? Wait. Nah, they've both kind of got that dark peppered hair. But Rishi's got a much more manly face and a big bulbous nose. I could totally see how you could mistake them for each other though because of the hair. I'm seeing the volumes swing pretty hard and aggressively here. Huh. Thought that was a better entry there, but it didn't hold. Where are we compared to yes on Friday now at this point? Okay, so we had like that initial climb off of the lows, and then there was kind of like the sideways area where we went sideways forever, and then later we bumped back up. So right now we're kind of at the same spot as that sideways area from Friday. That's curious to me. So much for the most liquid market in the world. I'm looking back at that delta, and I am kind of wondering, like, what happened there is everybody went long because of the PMIs and then got trapped and puked into it, and the fall was not so much the sellers. I mean, there was somebody selling there up at the top, but maybe all of this stuff going down into the lows was all of the longs from the PMIs, like myself puking. And why did it do that? Because the liquidity is crap, right? I mean, the way that the delta's played out and everything is a reasonable theory. But you know what? We're getting a pullback here and the yields aren't really shifting. So that's kind of interesting. Yeah, he's right. Ramson says we could have predicted the market reaction to the budget. He's right. He's right. I don't know whose idea that was. Can't come in and say, oh, our budget is effed. Ooh, I know what we'll do. We'll add even more debt. No, doesn't work that way. The more debt you take on, the less your chances of being able to pay it off are, the higher a premium the market will request of you. It's that simple. Okay. Okay. Those takes at 18 feel a little better. But look, the 30 is still not going. We're up 3 ticks and I'm still only +5. What's with that? Is it because the 30 is lagging? Could be. Well, there's still kind of this spot at, I'm going to say 118 even. I'm going to say 118 even in the 30-year and 19 in the 10-year, which was where we started to maybe build a little bit of a base before we fell lower. That they're going to, we might see some more volume trade at here. So there was some offers there. Looks like they are able to take 19 bid pretty easily though. Are we gonna break this Wising wet red wedge? I don't know what the S. So the flows for the next week are a little bit fuzzy because of end of month and everything. But then going after that, the flows in the S&P 500 actually look fairly positive. So I am thinking that November might be a positive month for the S&P 500. That's all I got for you on the S&P 500. What the S&P 500 is doing. Like, here's the thing. I'm not 100% sure why the treasuries are moving the way that they are. So why would I know why the equity market is moving the way it is? You know? Andre's just been scalping the heck out of it though. The S&P 500. I'm seeing all of his trades he's posting. Should go post those on the equity indexes channel of Discord. They would appreciate that. Well, they did bust through 19 there a little bit, but you know, it's kind of coming back and trading across the good 4 tick range or so here now. And I am seeing slight steepening again. It looks like that the 5-year has come up a lot more than the 30 has. Would be if you comment some equities. Yeah, it would be. The only reason why I don't comment the equities as much, it's not that I don't care about them or anything, it's just that our ability to be the informed trader over on the S&P 500 is much more limited, right? It's when you're talking about like what is a fair interest rate, that is something that is very, very definable, you know? Like what I mean by definable is like any one individual that's trading the bond market, they might have a number that they say this is a fair number, or this is the next spot that we're going to get to. For 4.5, it's the next step, that sort of a thing, right? Whereas when I look at the S&P 500, it's a collection of 500 different things. So to kind of go sit there and put a line in the sand is a little bit like, well, you can do that when there's like aberrations in the options that support that. But like in terms of like, what is it going to do in the next 5 minutes? You get what I mean? It's a little bit harder to be the informed trader in the S&P 500. When you have the opportunity to be the informed trader in the S&P 500, you're going to be getting monster moves. They might be too fast for you to catch, but they're going to be monster moves. But it seems to me that the really good trades in the S&P 500 are a little bit more sparse. Right? So it's not that the bonds follow the fundamentals more, it's that you get better predictors of order flow in the bonds. Whereas a lot of what happens in the S&P 500 really is just truly random. It really is just random. Noise. Yep, exactly. That's why if you want to be a noise trader, probably you should trade the S&P 500, right? Because if you come over and you try and trade some of these technical analysis setups on bonds, you get destroyed. You get destroyed. If I had truly started out on the S&P 500 and I had been on that the whole time, I don't think I ever would have learned the things about markets that I have, and that I would still be a believer in a lot of price action setups and stuff like that, right? Because the whole thing is the S&P 500, the noise kind of is favorable to that, you know? Is using VWAP and the point of control considered TA? It is if you're using it as like there's a specific setup and there's a trade entry that if we've been away from the VWAP for a while and we come back to the VWAP and I'm going to trade the VWAP bounce, that's the technical analysis trade. Yeah. And let me tell you what, they're not pulling it out of nowhere, right? It's just there's a fat tilt to that strategy, right? When it goes through the VWAP and comes all the way to the other side, it's going hard. There's a real trend going behind it. Whereas if it's just kind of being, it's just noise, if it's just noise again, then they're just gonna. What is your edge indicators that you're using in your training? Well, if you have my indicators for NinjaTrader, the most important one for you to put up is the synthetic dollar index. But get a chart, synthetic dollar index, put it on like a chart of the 6E, just because they're the most related. And it's so important to see what the dollar is doing. And then the second one that I would add is I would add a spread. I would add like either the 2s and 10s or the 30s and 10s on a chart of the Treasury, so you get some idea of what the yield curve is doing. And watching those things and kind of understanding what the current economic conditions are that day can really help you determine where the money is coming from and going to. So those are the two most valuable indicators in the package. For me, it's a lot easier in the, well, but that's the whole thing I'm saying, right? If you come into the indexes and you give yourself a really wide stop and you give yourself a pretty close target, you know, something like your stop is 20 ticks and your target is only 10 points. But I mean, you kind of have to adjust it according to what the range is. You have to adjust based on what the range is, but you know, let's say 20-point stop, 10-point target, you're probably going to win a lot and you're probably going to feel like it's easy. Yeah. But like, that's my whole point is that it's noise. It's good at fooling you, right? How do you know that it has anything to do with you or your technical strategy or any of that? Or is it just the random chances of it getting to your target before it hits your stop? And what do you do in this situation? Are you able to see the situation where it's going to go and hit your stop over and over and over and over and over again? You know what I mean? Well, how do you gain that edge? And I from what I've seen, the only way to really get that edge is to be the informed trader, to know what's going to happen, essentially, know what the future orders are going to be. And doing that in the S&P 500 is a lot harder than it is in the treasuries or anything that's a pure commodity. Okay, well, they've kind of been back and forth here between 18 and 19 now for a bit. Does look like they're trying to push the downside of it a little harder than the upside. Use volume profile and order flow. Use profile for know what areas of interest you need to be aware of an order flow to know when to react. So I guess I'll close this thing with this point then. Okay. The future orders can be anything, right? If I have 100,000 contracts to sell, I'm gonna sell 100,000 contracts, and I could make the market do just about anything, you know, by pushing and then kind of like backing off, right? And you could see all sorts of crazy things, right? But the reality is, if I'm gonna sell 100,000 contracts, I'm gonna sell 100,000 contracts. And so, you watching the order flow, what is there something that's going to tell you that there's 100,000 contracts to sell? There isn't, right? This is why the market ends up being really statistically efficient, but not very informationally efficient. Part of it is because anytime that somebody finds an inefficiency, they start trading it, and that removes the inefficiency from the market. That's part of it. But then the other part of it is that those inefficiencies are just so tiny compared to these big players in the market that make these moves, and the technical analysis sort of stuff doesn't predict what those guys are going to do well at all. If anything, I think in many of these situations, the technical analysis indicators always put you on the wrong side of those trades, you know? That's why I'm not day trading the indices. Now, on the S&P 500, if you swing trade it, that's probably a little bit better of a take for the indexes, right? Because then you're giving yourself a high enough time frame that you can kind of trade on being informed about some economic thing, and you're giving yourself enough time for that to actually work out, right? Where, in other words, it's easier to predict the order flow on a multi-day time frame in the S&P 500 than it is in the next 5 minutes. Like I've been saying, there's some of the flows are kind of set up to look pretty good for November for the equity indexes, actually, right? But in terms of what it's going to do in the next 5 minutes, not so sure. So the treasuries were looking pretty sad, and all of a sudden snap back up to 18.5 very, very quickly. They gonna extend through the other side of this and buy through the other side? It kind of looks like it might. Okay. Be able to take financial rules in more flexible ways after Brexit, says Ramsden. Wait, Brexit still hasn't happened. I thought that was done. You know what? You Europeans, you confuse me so much with your politics, I gotta say. There was all that mess about the Brexit, but then we haven't actually Brexited yet. Now, I should have known that. Should have known that. We're not to the date yet. No, they weren't able to get 19 to go bid. Not yet, at least. So looking at this, I'm kind of wondering if what we saw was some trap traders. They all puked. Now that they've all puked, the market is kind of going nowhere. Because I'm not, well, so I don't quite understand why it snapped back up to 19 so quickly. Could be that there's some buying in the 6J a little bit, I think. Yeah, does look like maybe there's some buying in the 6J. Like the 6J never fell back. So what type of trades are you looking on for bonds mainly? I imagine you're not swinging them, but you're scalping them. What risk reward? Yeah, so I'm kind of using like an equal risk reward. So like my max is like if I make $50 on one side, I'll probably take profits, and if I lose $50 on one side, I'll probably take profits. But most of my trades tend to be less than 50, and so really I'm more of, I feel like I have something that will predict the flow, so I try and stay in until the flow is over. That's why I'm kind of wondering here in this situation, like we have been getting a little bit of a bounce. I am wondering if there's some buying that's going to come in here, but that's why I was kind of thinking, well, what we might have been seeing here was just the bounce after all those guys puked. And if that's the case, I might be unreasonable for me to expect it to come all the way back up to like 24 or something like that. Right. Okay. Big bid at 19. The Japanese yen is going. The Japanese yen is going. They look like they are headed for highs of the day in the Japanese yen. Okay, well they did break out of that range. Okay, I guess we're going to be getting some comments from Sunak shortly. Why don't you do fire and forget? No, I don't think it would work. Well, so here's the thing. If I did fire and forget, 10 tick stop, 10 tick profit, I would probably be up. But not very much. I think that what I'm making on the individual trade wouldn't really pay for the commissions and the number of trades that you take and stuff. So I probably could do that. So no, I think the reality is that I do need to piggyback on some sort of a flow to make it worth it. But I do okay. Even on these days where I've made big mistakes and I've done poorly. You know, it's not so bad. That first, well, both of those losers, there was some things that I did wrong on them. The one I was thinking about getting out at 10, and I was just a little bit wishy-washy about getting out, and then it went, and I was like so trapped. That one pissed me off. Didn't piss me off. It scared the hell out of me. I was like, oh my gosh, this thing just collapsed hard, and I got stuck so bad. That one was ugly. But then the first one was also like, why did I give it that much risk? Probably shouldn't have. Enter like 50 contracts and sell 49 contracts for 1 tick and let the one run shifting your stop every one handle your direction. Well, so when I come over here into the 10-year, right? And I'll like buy a few contracts and like size up to 5, and then the 4 of them I will use to scalp the range. Actually, I kind of like the look of this area right here. Oh, it doesn't like that? Oh, because I wanted to put in a vol stop. That's why. Auto. Right. I actually kind of like this range to try this. Although I'm a little concerned about that 27, 73, and 19. Anytime that we've seen spoofs today, they didn't last, right? Should we call them spoofs? Big orders. Okay. Oh, it's time for me to go. Well, I will try and manage this during my morning meeting, I guess. See you like that. And then I can just have a stop really far out there. I would love to do that, but I think I would need a much larger account. Much larger account. Because it is pretty, excessive risk, right? If something I think that in the situations where I tend to do this, it's okay to take on that risk. But like if some breaking news that I didn't expect came out and pushed the market against me, I'd be fucked, right? So that's why I don't do that with the live account. Okay. I gotta get going, guys. I will see you tomorrow. And I guess we're gonna have an interesting week, aren't we? So stick around. In the meantime, stay excellent, team.